Welcome to Stock Chartistry's pre-market brief. I got some important news to share with you today. It's 7 a.m. Friday, January the 30th. Over the last 24 hours, we've seen a sharp shift in tone that suggests to me a nervous market near all-time highs reacting emotionally to headlines and positioning. This sell-off is being driven by reports that President Trump may nominate a more hawkish Fed figure. Markets immediately repriced their rate path and pushing yields higher and pressuring rate-sensitive assets across the board. Apple delivered strong earnings and solid guidance, yet the stock popped and then gave back the gains almost immediately. This wasn't purely macro. We've seen this pattern repeatedly across the Mag 7 in the previous earnings cycle. Strong earnings, initial upside, then profit-taking. We saw it again with Apple and Tesla on this cycle, so the tech earnings, you need to watch for the fade. At the same time, this isn't just tech rolling over. It's selective leadership. Meta and SanDisk surged on earnings and are holding still near the highs. Inside the semiconductor space, memory and storage names tied to AI and data centers like SanDisk and Micron continue to show relative strength. Now let's talk about silver and the broader metals market, because this is where the move is extreme. Silver was down initially 15% at the lows in the pre-market, collapsing from around $105 to $80 overnight. Gold and other metals are under pressure as well. This move is being driven by rates repricing and positioning, unwinds tied to the hawkish Fed narrative and not demand destruction. Did anything actually change? Microsoft, Tesla, and Meta all reaffirmed massive AI infrastructure capex. Microsoft confirmed accelerating data centers and cloud build-out. Tesla reiterated heavy spending on AI compute, autonomy, and robotics. Meta committed aggressive AI and data center investments. The AI and data center demand didn't disappear overnight. Nothing in earnings suggests that companies are pulling back. They're still spending. The issue right now is return on investment anxiety and rate sensitivity, not demand. When there's a war, you don't stop buying the bullets. Silver and the industrial metals, more broadly, are some of those bullets in this AI and infrastructure cycle. Another headline worth noting overnight was reports that the Trump administration may select Robinhood to administer new government-backed investment accounts for children. If chosen, this could effectively onboard a generation of users for that platform from day one, creating a significant long-term upside growth for Robinhood and durable user growth and asset flows. What may be actionable today? Let's be clear. There seems to be a disconnect between the overnight session and the regular trading hours. Overnight strength has been getting faded, and overnight weakness has been reversed in the cash session. So today, watch the opening carefully. We could see a gap and go if weakness carries through. But based on recent behavior, don't be surprised if the regular trading hours get fade the panic, and especially in the areas where the fundamentals haven't changed. This still looks like emotional repricing in a nervous market to me, and not a breakdown in demand or structure. However, follow the price action.